Hello guys and welcome back to my channel. In this video I'm gonna share with you guys a trading plan that I worked so hard to come up with. It's so easy that you can execute it in just 5 minutes. You can analyze the market with it in just 5 minutes, execute it in less, and it's effective. It doesn't have a lot of moving parts. I studied so hard guys to come up with this. I like hundreds of hours of backtesting, studying ICT concepts, forward testing, demo trading, live trading. So I lost money. We all lose money, and I'm gonna give it to you for free, guys. And that I don't want you to go through what you went through. It's totally free. Just hit the subscribe button and maybe leave a comment, suggestions of what I can do better. Just I want to clear something out before we start, guys. So first of all, I am not reteaching ICT concepts here, alright? No, what I'm doing is ICT is like a big fridge, alright? A giant fridge with, when you open it, you find all different kinds of ingredients of food, alright? What I want to do in this channel is to extract some ingredients from it and make a recipe, make a dish. A dish is a trading plan, alright? We're gonna pick maybe 3, 4, 5 concepts each time, and we're gonna make a trading plan. We're gonna backtest it on live, on demo trading, and I'm gonna share it with you guys here. So yeah, this is the goal from this channel. Alright, let's start. Alright guys, so let's go through the business. First of all, this model, this trading model, this strategy doesn't require a daily buys. Alright, I didn't write that in the title as a clickbait or to get views. No, this is this comes from real results. Alright guys, I backtested a lot. I live traded this model, and a lot of times I had an initial buys before the day starts. Maybe I want the day to close higher, and at the end of the day my buys was wrong, so the day closed lower and I still made money. Alright, so and that happens a lot of times, alright? So daily buys is not mandatory in this strategy. So this strategy can be applied on both EU, I mean forex pairs, and I prefer Euro USD and GBP USD, and can be applied on indices. By indices I mean US 100, US 500 or US 30. So you can apply it on both markets. On the first part here in this video, I'm gonna show you how to apply it on the forex markets. Alright, so let's start. First of all, I'm gonna show you an overview. Alright, I'm gonna show you just by drawing lines before we dig into the candles and show you a live example. I want to give you an overview by just drawing lines. Alright? Alright. So, for forex pairs, this is for forex. Between forex and indices, you just modify just some parts of it. Alright? It's pretty much the same. On the forex, you only trade you only trade the London session. Alright guys, the London kill zone. The London kill zone is from 2 a.m. all the way to 5 a.m. So you have a time window, alright? You have this time window. I don't want you guys to take trades before 2 a.m. or after 5 a.m. I don't care if it is before like 3 minutes, 5 minutes, or after 5 a.m. by 5 minutes, 3 minutes. I don't care. You have a 3-hour window. If you don't have a setup here, you close the chart and you come back tomorrow. So what you want to see is the Asian session. The Asian session is basically from 8 to midnight. This is all New York time, so make sure you change the time from here, make it New York. You want to see let me just throw it. You want to see like the Asian session is going to be like this. All right, it's going to be like a consolidating on most times. All right, so this is the Asian session, right? Let me just click this, and this is midnight. All right, this line, all right, here I'm gonna make it bigger so you guys see it. This line right here is midnight. All right, it's just, this is midnight. Right here. From midnight, you want to see price is reaching to maybe the Asian high, all right, or the Asian session low. Let's say the Asian high, all right. We want to see price do this, just rate on this price like this, boom, maybe like this, because after midnight there's gonna be a volume, all right. So maybe like this, and let's say this is here the London kill zone, which is 2 a.m. and a volume came out, and this happens, all right. So this is what a rate. So you want to see a rate on the Asian session high. This is the Asian session high. Want to see when a rate happens. I'll just fix this. When a rate happens, alright guys, you want to see a higher time frame PD array. You want to see price rejects from a higher time frame PD array. Let me just animate this here. No, let's just, this is a higher time frame PD array. A higher time frame PD array can be either an order block, it can be a fair value gap, it can be a rejection block, it can be, I don't know, what did I miss? A breaker, all right? A breaker. Yeah. So when price comes here, so when price rates the Asian session, the Asian session, and it hits this PD array, higher time frame PD array. By higher time frame PD array, I mean the 15-minute. It can be the 30-minute, the 1 hour, the 4 hour, the daily. I don't care. All right. When price arrive at this higher time frame PD array, I want you guys to go to the 3-minute or the 5-minute. So you zoom in to the lower time frames. All right. So you want to zoom in on the lower time frames here, and you want to see a shift in market's structure. All right. So here you want to zoom in and you want to see like maybe this like displacement and a shift in market structure. So you want to see recent swings get broken. When this displacement happens, you want to enter on a fair value gap here. All right, I'm gonna go through this on details when we go to live charts, so please hang with me here. All right, when price reprice to this fair value gap to balance it, here you want to take the short, all right, and target the sell side liquidity here. Now let's go through this one more time. You first of all, after midnight, you want to see price, preferably you want to monitor price on the 15-minute time frame. So just keep it on the 15-minute time frames. When it trades on the Asian session high or low, you want to see a higher time frame PDO rate above it. All right, in this you want to sell, you want to see above a buy side liquidity a higher time frame PDO rate. When price arrives at that higher time frame PDO rate, I want you to go to the lower time frames and look for a market structure shift. All right, guys, let's say price is done. Let's just remove this. Let's say price is go through this, so it pierced the higher time frame PDO rate, and let's say it is a fair value gap in this case, and you see like a shift in market structure in the lower time frames. All right, so what you're gonna do here, you won't do nothing. All right, that's mean the higher time frame PDO rate got invalidated, and it is likely to become an inversion. All right, guys, so you do not take this, you do not want to take this, and just remove this. So this is basically for forex pair from 2 AM to 5 AM. Now let's remove this and let's go to live examples. I think let's go to the 1 hour. So like I said, I want you to make this will make it easier for you guys. Make a horizontal, a vertical line on the midnight. You can just on the midnight and on the 2 AM. All right, 2 AM, that's when you engage with price. Now I want you to go to the 15-minute and then monitor price. So this is this yellow rectangle is the Asian session range. All right, so it's easier for me to see it. All right, this is just an indicator. It's plenty on trading view. Just pick one. Now what you want to see is a rate. It can be a rate on the Asian session low, or it can be a rate on the Asian session high. So keep this in mind. You do not engage with price unless you see a rate. Now you see a rate. All right, we can see that price has took this Asian session. Now what you want to do when this happens, I want you to go to the left of the chart and look for higher time frame PDO raise. All right, now I want you to pause the video here and look for higher time frames PDO array. It can be an order block, a fair value gap, a rejection block, it can be a breaker block, so whatever you can find. Alright, pause the video and choose one. I hope you pause the video, guys, because that's how you learn. If you can see that there is a fair value gap right here. Alright, if you get to the 30-minute, it doesn't, so it's here also, the 30-minute, but when you find it, just stop right there. All right, so there's a fair value gap and there's also an OB here. Now what you want to do is wait for price to reach that. All right, I want you to set your alerts. And let's see, price, look at that. When price reaches for this fair value gap, I hope you can see it. When price reaches for that higher time frame PDRA, I want you guys to go to the lower time frames, like the 5 minutes, or I prefer the 3 minutes. The 1 minute is forbidden, guys. Do not go on the 1 minute. You will see a lot of conflicting signals. You will see things that's it won't work. All right, guys, you will miss a lot of things. The 1 minute, it's just it's noisy and I don't like it. All right, so we are on the 3 minute time frame. Now we look for market structure shifts. All right, yeah, maybe you see that all right, this is a market structure shift. Yep, it is a market structure shift, if you can say, but the displacement is not energetic enough. Alright guys, we want the displacement to be energetic, to be caffeine bars. Caffeine bars meaning it will be like beefy candles. Alright, we want to see maybe something like this. Alright, like this or like this. We want to see, or even better, displacement meaning market is likely to go lower. Alright, so it is willing to go lower. So for me, this is not a valid displacement. And this pay attention here, guys. This choosing the right displacement saved me a lot of trades. All right, a lot of money, a lot of losing trades just by choosing the wrong displacement. All right, so this is not a displacement, and you will see what I'm making as a point after a moment. So just keep forwarding. See what? All right, on the 3 minute, you can see if we take this as a displacement, although as you can see here, if you take this as a market structure shift and this is displacement, you could easily get stopped here. So as I told you before, we want an energetic displacement. Let's keep going. And that's what I'm talking about, guys. This is a displacement. We see like beefy candles. It's a lot larger in the size than the previous ones. All right, this is what you want to see. All right, this is what you want to see, guys. This large displacement. You can see it on the 5 minute also, and you can see it on the 3 minute. So now I'm going to give you something that I learned from episode 12 from the 2022 mentorship. If you could remember, episode 12, I believe it is called Advanced Market Structure for Precision Technicians. Michael, in that episode, he talked about intermediate term highs and intermediate term lows. What is an intermediate term high and intermediate term low? Is when a recent swing balance a fair value gap. I'm going to give you examples. Learning by example. You can see that this is a fair value gap right here. All right, this swing right here is an intermediate term low. Why? Because it balanced a fair value gap. All right, I'm going to give you another one here. For example, this one right here, right? This fair value gap. This swing balanced a fair value gap, thus it is called an intermediate term low. This one too, all right? See the fair value gap? This is an intermediate term low. All right. Now this is a fair value gap. All right. This swing is called intermediate term high. All right. Now, what is the use of this ETH and ITL? When during a buy program, all right, guys, during a buy program, intermediate term lows, it is likely to be not violated. All right, guys, price will likely not violate those. So when price violates those intermediate term lows with a displacement, then it is likely that the market will shift. All right, so pay attention to this. Now if we see this displacement right here, you can see that this is a fair value gap. All right, guys, this is a fair value gap, and this swing right here filled this fair value gap, thus it is called an intermediate term low. Price violated that intermediate term low. You can see here also this is an intermediate term low and price violated it. So meaning that maybe it is likely that the market is switching from a buy program to a sell program. All right, guys, pay attention to this. Go to your charts and see for yourself. Now back to here. When you see this energetic displacement, what you want to do is to measure this displacement like here, and when it starts to retrace, I want you to go to enter on the 50-minute. all right, on the 50%, like here. But the stop loss must be above the swing. All right, above the swing, guys, here. And for the TP, 2.5 is I believe it is the minimum, because we have such a lot of confluences that price is taking liquidity, plus it is resulting from a higher time frame period rate. Thus 2.5 hour is the minimum, and you see for yourself. Now let's see, and as you can see, we reach that. All right, like here. You see, guys, so this is for forex. Guys. For indices, I'm gonna make another video. If you want, leave a comment. Maybe I'll do it, maybe I won't. Based on the comments, based on the reactions of this video, I'll decide. If you want to rewatch the video once again and take notes, and I want you also to backtest this. All right, feel free to do it, and that would be all, guys. I guess I summarize it all. It is very simple yet effective. It doesn't offer itself much. Maybe you can get 10-12 trades during the month, but it has a higher win rate. All right, guys. So there is that. On indices, you can get up to 20 trades. All right, 20 trades per month, and it is just that's just great, because if it is based on your personality. Like I said, if you want me to make that video, just ask. All right, and I'm gonna leave a link for my Twitter account. All right, if you want this journal, I backtested this a lot. If you want this journal, it has a lot of you can see the pictures here and all the trades I took. If you want this journal, just follow me on Twitter and send me a DM. All right, guys, send me a DM, and I'm gonna send it to you for free to study it, to make this plan make it simpler, maybe when you see a lot of examples. So that would be it, guys. Just hit that subscribe button if you like this content, and if you don't, maybe leave a comment what I can do better, and see ya.